What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be going over in this video is a brief Ortex update going into the end of this week to kind of get a better understanding of where the short interest is at and where the utilization is at. Those are the two key data points that I have been watching and I deem to be the most important in figuring out where we are at the current time for this short squeeze play that we are all looking for. In addition to this, we are also going to be looking at the gamma squeeze potential going into the next couple of weeks. We are in this next bullish cycle for AMC. We are seeing a little bit of consolidation or choppiness over the last couple of trading days, but again, we are still on this uptrend. So in addition to that, we also have this very interesting dynamic going on with Macquarie right now. I believe that's how you pronounce it. They have essentially said that they think that AMC is going to tumble about 80%, but their positions at the current time suggest absolutely the complete opposite. So we're going to go over exactly what this situation is and what it means for us as AMC shareholders. Now, the most important thing that I really want to get across to you guys has to do with the broad market. There is a very important issue going on right now, and it has to do with the Fed tapering of assets and the potential for a market downturn. Now, we've gone over how this could affect AMC in the past, but the fact that we are seeing these developments right now, I want to explain to you guys exactly what's going on and how we can position ourselves moving forward. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button. So at the current time that I'm recording this video, AMC is currently trading at $44.28, basically flat on the day. I apologize if the price is vastly different by the time you guys are seeing this video. I do have to hop on a flight in a little while to go meet Trey and TMI at our potentially undisclosed location, but we still have a lot of analysis to do today, so I wanted to make sure I got this video out to you guys. Now, coming over to Ortex, we can see that the short interest has gotten a little bit of a boost. We were at that 16% range over the last couple of days, and we've now jumped back up to 18.2%. According to Ortex's estimates, the shorts have not covered their position, and for this short squeeze play that we have right here, the fact that the shorts are not covering just suggests to us that we are in the same position as we were at $5 a share, or if we get up to those really high levels that a lot of people are expecting us to get to over the next couple of weeks. But what's interesting here is that the utilization has gone down. The fact that the short interest has started to go up, but the utilization has stayed about the same could mean one of two things. One, it could just mean that the utilization is a little bit laggy. There's a little bit of a delay when we are seeing the numbers actually get accounted for in this utilization number. The second, there could be just more shares available to loan out. When we think about the definition of utilization being the amount of shares that institutions are willing to lend versus the amount of shares that already have been loaned out, when you increase the amount of shares that institutions are willing to lend, it will lower the percentage utilization that we are seeing right here. Now, when we come over to this interesting situation that we have going on with this gamma squeeze, we have 44,442 calls expiring in the money at the current time for this week. But this week, in my opinion, isn't really that important in terms of a gamma squeeze, but September 17th is. We still have about 117,000 contracts in the money. In this out of the money contract number right here for the calls, 278,973 is continuously going up. If we can continue this uptrend with AMC, we are going to see more contracts run in the money, more delta hedging from these institutions, which is going to create that positive feedback loop of putting more buying volume into the stock, pushing the share price up, sending more contracts in the money, which just means more buying volume in terms of that hedging. Now, when we come over to this article right here, we have this analyst from Macquarie who Matt Kors actually kind of went back and forth with in an interview yesterday on CNBC. Analyst defends AMC stock downgrade that has the apes up in arms. So what they are saying here is that he believes that the fundamentals of AMC are not justifying its current price. That may or not be so at the current time, but what you have to realize is that AMC is on an uptrend. It doesn't necessarily matter, in my opinion, where they were at in the past and where they are at now post-pandemic, but the fact that they are on this significant uptrend in terms of opening new theaters in high-performing locations. We are seeing them add new events, a really, really strong relationship with their shareholders. The fundamentals are getting increasingly better, but what we are seeing from this analyst is they think the stock is going down 80%. Okay, cool. Let's take a look at what this institution did in the last quarter with their AMC position. Macquarie Group right here, remember, they are very bearish on AMC apparently at the current time. Shares changed. They increased their position size by 618%. Now, they don't have very many shares here, 11,204, but why would you ever increase your position size by that much if you are expecting the stock to go down? That does not make any sense. Now, here is a little bit of a caveat to this where we could see a different side of the story. Yes, it does not make any sense that they are basically saying that AMC has an 80% downside and they've increased their position. But what we have to remember is that a lot of these positions that these institutions are holding are not reported. So short positions of really any kind, directly shorting shares or shorting options, meaning selling naked options in the market, are not reported. It is also entirely possible that these shares that they were holding at that time were used to hedge options that they were selling. So there are two sides to this situation, but at the same time, it does not make any sense that this institution would come out, downgrade AMC, and also have this significant increase in their position size. Now, moving on, we also have an update from NSCC for their NSCC 010. This is the SFT program. It is basically going to be used to prevent fire sales in the broad market. So what we're seeing here is this rule, along with a lot of other rules, the Commission is extending the 45-day period for the Commission action on the proposed rule change. The Commission finds that it is appropriate to designate a longer period within which to take action on the proposed rule change so that it has sufficient time to consider and take action on this proposed rule change. So now the new date is going to be November 10th for the potential acceptance and implementation for this new proposed rule change. We see this happen a lot, but what we need to think about is none of these proposed rule changes by themselves when they come out are going to be the squeeze catalyst. These rules are not directly related to AMC. They are more directed to the broad market, but the broad market is very applicable and necessary to understand when we are talking about this short squeeze play that we have right now. And going off of that broad market thesis, we need to take a look at this article right here. Goodbye taper, huge jobs miss as U.S. adds just 235,000 jobs in August. As we previewed earlier, while consensus for today's closely watched payroll print was 725,000, so that was the estimate, a drop from last month's 943,000, they only added about 235,000 jobs. What we're thinking about here is economic recovery. If the Fed is going to taper their asset purchases, they need to be able to see really strong signs of economic recovery. The fact that we are not seeing these jobs numbers meet expectations shows that we are not at that economic recovery stage yet, and we still have a long way to go. The other thing that we need to think about here is that if the Fed does taper its asset purchases, we are most likely going to see a significant fall in the broad markets. There are a lot of other things at play here, such as inflation, the overall over-leveraging, and honestly, the debt ceiling situation that could really, really hurt the broad markets due to a potential United States credit rating downgrade. And the Fed doesn't really want to expedite that situation with their tapering. We have seen comments from the Fed that tapering is coming, but there really is no signs at the current time that they are going to do it in the near future. We need to see economic recovery for that to happen. So when we're thinking about how this applies back to AMC and what we are thinking about here, it almost gives us blue sky territory. We could potentially see the markets continue on this uptrend. And if a lot of people are worried about that market correction and how it could adversely affect AMC's share price, it really won't cause that much of an issue, in my opinion. Now, I know a lot of people have been bringing up the concept of negative beta again for AMC, and although it is rare, when we're thinking about a heavily manipulated stock such as AMC, these different correlations may not necessarily apply. If we see the broad market start to come down, we are most likely going to see AMC come down with it. But if you've been watching any of my live streams or any of my videos, that is almost going to be the last final shakeout because they are going to add to their short positions, and it would most likely start the covering at just a lower level, but with more shorts outstanding that they need to cover their positions. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button. So I hope you guys are having a great day, and I'll see you guys in the next video.